Portfolio Builder followers, 2019 is starting off with a bang with just about everything going up. Not only are cryptocurrencies up today, but stocks are up. The VIX is collapsing. Even the TLT is going up. The Chinese market, MCHI, is seeing a huge inflow of cash, but still relatively flat. The Japanese market's having a modest bid up. The UK and Germany also having very similar charts. The Indian stock market has just become larger than Germany's. Brazil's market has jumped dramatically with the election of a new president. And meanwhile, gold is going up consistently, loving the uncertainty and level of debts that are continuing to grow. Meanwhile, our model portfolio is now up $2,500 approximately, as the stock market's had one of the worst crashes in a single month since 2008. Currently, our portfolio has a 70% stock position, which it built as the December crash got underway, and a 30% cash position. And this is a zoomed in look at the SPY ETF. I'm expecting stocks to bounce back into this 260 to 280 trading range in the next several weeks. And at that point, we will switch back to our more default setting of 10% gold, 40% bonds, 10% cash, and 40% stocks. Meanwhile, if we scroll down, this is where we keep track of our covered call writing and option writing. Currently, we only have one option contract, which is against the SPY ETF, taking advantage of the high levels of volatility while it still lasts. We're doing 3-day expiration in the money options against the SPY ETF. And with the current settings, we're using approximately 28% of our total portfolio to trade against this ETF. And this is while we have a 17% position in China, a 7% position in Japan, 5% in Germany, etc. After that, our positions get much smaller. And of course, we're holding a large cash position. That's to protect us against further downside risks, which would primarily happen if the tariffs began to really go into effect and all the positive dialogue about China and America coming to agreements were to reverse course. And so you can see right here, we've been consistently writing covered calls to help offset volatility in the market. But right now, we're letting the majority of our portfolio just appreciate it on its own while taking advantage of the volatility in the U.S. equities. And for those of you who'd like to get our trade alerts, our newsletter, and have a 30-day free trial to have your own portfolio builder platform, just click on the link in the left-hand corner and head over to our website for a free 30-day trial. Mixed news out today. China has said that they want to come to terms with a trade deal. And this is after a year of pain and watching their stock market lose around 20% of its value. Bolsonaro pledges to rescue Brazil from economic doldrums, which we're playing in our portfolio through the EWZ. While it's up significantly since he took presidency, overall the Brazilian stock market is still at a relative discount from just 5 years ago in 2013. Earlier this morning, we issued this trade alert to sell to open 5 January 4th, 2019, 247 put option contracts. This generated a credit of $1,475 in a 3-day trading period. And the worst case is the SPY ETF would crash dramatically below our strike price plus the premium paid, forcing us to purchase these shares at a loss relative to the premium we collected. However, that's not happening. After writing that contract this morning, the SPY ETF flew all the way up to 251, back down to 249, closed the day out at 250. So this trade is pretty much in the clear now with 2 more trading days to stay above 245. Now I do expect to roll this trade over 1 hour before the market close every Friday, Monday, and Wednesday coming up. And we only did today's trade alert in the morning because we didn't have an open position through the holidays. Meanwhile, some of our cryptocurrencies are already showing very significant gains, with Litecoin up 204%, Ethereum up 123%, and this portion of our portfolio, which launched when Bitcoin was trading around 6,500, currently has still a loss in the Bitcoin position, but we can see the altcoins are starting to bounce, and I'm getting ready to double down on our cryptocurrency positions in the portfolio. Some interesting headlines today and articles out. John Rubino is predicting that the federal debt will continue to grow and that this will, in the long run, be bullish for gold, as well as having such political uncertainties going into a new presidential election in 2020. South Korean exports are slowing down. SocGen is expecting a 50% drop. US PMI drops below 54 following China's global slowdown in growth. Over at YouTube, we have Peter Schiff and Jim Rogers predicting Bitcoin will now go to $0. Of course, they're gold bugs. And Bank of America has a pro-con chart for the potential bull-bear case for U.S. equities. Of course, the big bullish case would be eased trade tensions with China, which at the moment seem to be making progress and is the key catalyst to drive stocks back to the trading range we're looking at, and with good enough progress could potentially help the stock market break into new highs. Other bullish bullet points are inflation. Low oil prices could drive margin expansion. Slower wage growth and inflation from rate hikes could boost margins. Their economists see a low probability of an economic recession. As for the top points on their bear case, further trade tensions will hurt sentiment and global growth. And then the big fear is that high-yield bond market collapses, which would stop corporate buybacks, which could also help create a stock market crisis. Meanwhile, we have tweets and messages from Trump being passed along on Twitter, essentially saying that the stock market will fix itself soon as the trade deal with China is complete. So that's where we stand right now in our portfolio, generating income against our SPY ETF 3 times a week, letting the rest of the global ETFs just appreciate all on their own, and then sitting on a 30% cash position in case we get extra volatility or a breakdown in the China-US negotiations. So thanks for your time. Look for a new update tomorrow.